Perhaps instead of manipulating interest rates, which really only benefit the banks, putting more pressure on many of those in the middle class who are just trying to survive. What's my payment going to look like? Is it going to double? Is it going to triple? We are creating another storm, pushing the problem down the road for someone else to deal with, which is not a great way to deal with a housing crisis. Hey there, people. You are watching episode 5 of the Under the Radar Real Estate Podcast, and we are covering 3 topics today. We are going to jump into the under the radar neighborhood of Fairbank, which is the northwest corner of the city. The second topic, we are covering a very spicy topic right now in real estate, which is the Bank of Canada rate increase. Definitely don't want to miss that one. And then we're also going to be covering, for our real estate tech segment, the new Apple Vision Pro, which again has been plastered all over social media. It'll be very interesting to see how I think it'll apply to real estate. So before we jump into Fairbank, remember to subscribe, hit us up if you have any questions. So let's get into Fairbank. Fairbank is a neighborhood in the northwest corner of the city, roughly bounded by Dufferin to the east, Eglinton up north. You have Caledonia in the west and Rogers Road down south. So it's a small pocket of the city, but very unique from the other under the radar neighborhoods we spoke about because it's predominantly a neighborhood of single family homes with a few rental buildings dispersed throughout the neighborhood. So let's jump right into pricing because that's what you all are here for and that's what you want to know. So Fairbank is an under the radar neighborhood, and that's predominantly due to the pricing. So when we pull up the numbers, very easy to see right off the bat. Average selling price in Fairbank, $1.3 million versus the city of Toronto, which is last month almost at 1.9. That's not almost, just over 1.9. So that's a $600,000 gap in the overall average in the city of Toronto versus Fairbank, which represents a 32% savings over the city of Toronto. When we look at semi-detached houses, average semi trades at just over 1.1 million in Fairbank versus the city of Toronto that's almost 1.4 million, so a 19% discount in Fairbank. Very easy to see why Fairbank is an under the radar neighborhood. It's a neighborhood in Midtown Toronto, bounded by some very trendy neighborhoods close by, of course, Otalia and Witchwood and Oakwood Vaughan, which trend quite a bit higher than this neighborhood. So if you go just a tiny little bit west, you're looking at like massive discounts over the overall city of Toronto and over some of these neighborhoods. Now, the other thing with Fairbank is that you're not going to find a lot of other housing types other than single family homes. So you're not really going to get too many condos or townhouses in the neighborhood. So it's predominantly a single family, so semi-detached. I don't even think there's that many even row houses in the neighborhood. So semi-detached and detached homes are the dominant house type in the neighborhood. But like we said, averages quite a bit under the city of Toronto. So certainly a neighborhood that if you're looking for value, especially in this changing real estate climate, it's a neighborhood that might be able to beat the market. So when we think about what makes it super unique is its topography. It's very hilly, it's very green, especially in the summer, obviously, and quiet. It is a super quiet neighborhood, especially when you think about you have Eglinton, which is a major artery in the city. You have Dufferin, that's another major artery and pretty loud with the buses and traffic and everything going on Dufferin. And then you have Rogers Road and Caledonia, which are not quiet streets by any means. But yet once you get into Fairbank, it's such a quiet neighborhood. It's serene. And like I said, it is green. There's a lot of parks. So it's very interesting from that point of view. When we think about demographics in the area, there's not one demographic that really dominates the neighborhood, which again makes it very unique. It also then contributes to a very interesting food scene. I mean, some of my favorite spots in Fairbank, you have Sushizuki up on Eglinton, you have Rebozo's Tacos, which is on Rogers Road, great taco spot, authentic tacos, I must say. And then you have, and I butcher this name all the time, Dos Minho on Dufferin, which is a great Portuguese bakery, some of the best Portuguese treats in the city on Dufferin. And then when we think about transit in the area, it's super convenient. You're going to have the 2 brand new LRT stations, which I pray open soon, with a Fairbank station at Dufferin, and then you have the Caledonia station in the west corner of the neighborhood. You still have the Dufferin bus and the different bus routes that go through the neighborhood. If you're a car commuter, you can head over to Allen Road. You also have Black Creek, where you can get up to cottage country pretty quickly for those who have cottages or those who just like to escape the city in the summer. And then for the cyclists, you have the York Beltline Trail, which is at the north end of the neighborhood, which you can cut across the city and get to Midtown pretty quickly along that dedicated stretch, which was an old rail line, which is pretty cool, but it's a dedicated cyclist walking path that cuts right through the midtown of the city. So now let's jump into the spicy topic that everyone probably clicked on this video to see. Let's hear Josh's take on the Bank of Canada rate hike. So the Bank of Canada, as you saw all over the news, and you've probably seen it on social media a billion times, raised its overnight rate by 0.25 points. So the new rate is now 4.75. So that means mortgage rates went up. The banks now, most 5-year fixed rates, which is the rate we use kind of our baseline, over 6%, raised the value of all of the variable rate mortgages as well. So what does this mean for real estate? So right now, anyone who has a pre-approval, they are now scrambling to acquire properties to ensure that they can take advantage of the lower pre-approved rate that they were promised by the banks. We're likely not going to see a massive drop in price overnight. There's still going to be likely a little bit of spillover from the buyers who are looking to take advantage of the lower rates they were promised by the banks. Just like we saw last year, we're likely going to see a gradual potential decrease in price as time goes on. But right away, we are starting to see a little bit of change in buyer sentiment. So buyers who were pretty hot looking to get into the market are now on the sideline again saying, okay, is there going to be another increase? What should we do? Our criteria has likely changed. We could afford a certain amount. Now it's going to be different. It's going to be a different amount. Effectively, what this means is the Bank of Canada is trying to throw some cold water on the overall economy. Housing is a large piece of the Canadian economy. So when they saw house prices going up month after month, inflation wasn't being held in check, they decided to make this policy decision. Now, was this a surprise? Let's go back to my market update from only about a week and a half ago, and we'll see what I said. What are central banks and governments likely to do? They'll go back to raising rates again, and again, make things more difficult on that demand side for people to buy homes. That's great for a temporary fix. It's not going to fix things long term. As you just saw, your boy called it. We knew that the Bank of Canada, this is the only tool that they have in their shed to rein in inflation, is by manipulating the rate. They don't want to use any other tools that they may have at their disposal other than just the rates. It's a tough thing because obviously I have a very biased view of this, but I don't believe that this policy rate decision is necessarily going to fix the problem on the housing side. And why is that? So I think this policy decision just kicks the can down the road. So there's a few things that this policy decision will affect in a very negative way when it comes to housing. So number one are builders. Most builders that build, especially here in the GTA and I'm sure across Canada, borrow money to finance and build whatever projects, from small builders to larger scale developers. Some larger scale developers may have access to capital that a smaller builder may not, so they'll likely be able to continue to build. But I know even personally some small builders where this will affect them right away. So they'll go from potentially building some new resale product or rental product to now saying, hey, we're going to hold off. We can't get the loans that we were going to get, so we're not going to build. This also will likely push some more people that were thinking of purchasing into the rental market. The rental market is already competitive because we're already in a high rate environment, and especially in the city of Toronto, we already don't have enough rentals to satiate demand. Another way that this may affect the rental market is now you may be pushing some smaller investors, smaller landlords to try and sell their investment properties. So you're taking more inventory out of the rental market from smaller landlords who are selling, They're going to put these listings on the market, hope that they can find some buyers for them. But then again, it removes some of these homes from the rental pool. All of these compounding issues are going to come to a head in 2025 or 2026 and 2027 when hopefully we're in an environment where they've started to reduce these rates and people start re-entering the housing market on the buy side in larger numbers. What is that environment going to look like? We've already been underbuilding over the course of the pandemic. We're still underbuilding. If you watched our last video on the market update, we talked about that, how Canada is severely underbuilding housing. So now we have all these renters that were potential buyers. They may be re-entering the market when rates come down. We are creating another storm where, yes, they have likely managed to quell some of the demand right now and hopefully push down a little bit of inflation. But what's going to happen in a few years when all those buyers come back to the market with lower rates? I'm not here to predict what's going to happen, but it's not looking great, especially when we have a deficit of housing, a lot of increased demand, and lower rates. We've seen this play out before. I'm hoping that the Bank of Canada and the federal government and all the politicians can hopefully find a way to figure this out, because we're heading towards a potential storm in a few years by some of the decisions that they're making right now. And again, it just feels like decisions that they're just kicking the can down the road, pushing the problem down the road for someone else to deal with, which is not a great way to deal with a housing crisis. So we've heard a lot of problems. What about solutions? A lot of people, talking heads, you've probably watched on YouTube, on social media, point out a lot of the problems. No one's really looking at the solutions. Now, I'm not saying here, I'm not a professional economist. I'm not saying I know more than the politicians. But from my point of view, these are some of the solutions that I could potentially think of that may be better to solve some of this problem, especially on the demand side. I'm shocked that they didn't look at, especially when we look at real estate specifically, I'm surprised the Bank of Canada didn't give recommendations to the government and say, hey, perhaps instead of us manipulating interest rates, which really only benefit the banks, perhaps maybe we look at different things to stifle demand short term, like perhaps shortening amortization, increasing down payment requirements for buyers, just find different ways to rejig the qualifications to acquire mortgages for buyers temporarily. In my opinion, that's a much better way of stifling some of the demand, at least from a real estate perspective, rather than just increasing rates, which puts further strain on those who hold home equity lines, or those who are on variable rate mortgages, or those who are about to renew their mortgages over the next 12 months. A lot of buyers I know are scared to say, hey, what's my payment going to look like? Is it going to double? Is it going to triple? I hope that they look at some of the decisions they've made and they perhaps, instead of constantly just raising rates to tackle inflation, perhaps look at other tools. I'm sure there are other tools they could have in the shed. Let's look at those other tools instead of just raising rates and putting more pressure on many of those in the middle class who are just trying to survive this latest recession. All right. Real estate tech. For our real estate tech segment, let's look at the Apple Vision Pro and how that will relate to real estate. There are tons of applications for this technology. I'm sure you guys watched some of the keynote, or you've seen some of the funny memes online for the Apple Vision Pro, effectively snowboard goggles with screens in them. Pretty cool technology, fairly clunky from a company like Apple, where they have such sleek design. Everything they've made from a design point of view has always been very sleek and better than their competitors. When I saw these goggles, it wasn't necessarily what I was expecting. I was expecting maybe just some cool Ray-Bans with screens in them, and they basically presented us with snowboarding goggles. But anyhow, very cool technology that I think, especially looking out long-term rather than short-term, once they refine this technology and are able to make it a little less clunky and more sleek, I think it has some great applications. So let's look at, from a real estate perspective, how this could potentially help and change the way we do real estate. So the first thing I thought of was immersive virtual tours. Let's say if you have a client who has a mobility issue or a disability and it's very tough for them to go out and see properties. We have a lot of great tools right now to help them in their search, right? Whether it be a FaceTime tour, which I was doing a lot of over the course of the pandemic when people weren't necessarily able to get out of their homes. I would go into properties and take like a FaceTime tour, which is great. Or we have a lot of great virtual tours, 3D tours such as Matterport that we like to use. They're great immersive tours where you can look at it on your iPad or your phone or your computer, and you can take a great immersive tour of a home. With these new VR goggles, you're taking that level of immersion and immersiveness even further. You're really getting into the house, almost feeling like you are in the property. So again, those who are unable to physically get into the property to see it, this is pretty much the next best thing. Yes, you're not touching and feeling everything, but you really will, from a visual standpoint, it really feels like you are in the home. So great for that. Also great for people looking at purchasing new sale. So a lot of times when you're buying a brand new condo or a new house off plan, again, the builder can give you some really great artist renderings and give you these great graphic design virtual tours of the space. But now when you get to put these goggles on, you're really, again, right into the space. So you really have a better idea of what you're purchasing. Especially when it comes to condos, when you're buying let's say a 800 square foot, 2-bedroom, 2-bathroom, a lot of people have a tough time wrapping their head around, like, how do you fit 2 bedrooms and 2 bathrooms into 800 square feet? I've seen much smaller ones. I've seen 2-bed and 2 baths in 580 square feet, for example. Another thing from a realtor perspective, first-time buyers, a lot of times they like to get a second opinion of the houses they're looking at. So they'll have a parent or a guardian that'll want to come by and look through the space with them to give them another eye. I know relatives are rolling your eyes. You're going to have parents from thousands of kilometers away commenting on the space. But it is very helpful. Even when I purchase real estate, I still tap my in-laws or my parents to get their opinion sometimes of the stuff that even I'm looking at. Sometimes you do need that second pair of eyes. And now you can get that second pair of eyes virtually. You don't have to have that parent or guardian or friend or colleague or whatever come sometimes thousands of kilometers away to come and just view one property. You can get them to put on these goggles and view the property. And to tie into all of that immersive virtual tours, there's a lot of other cool applications when it comes to, let's say, a home inspection. At least here in the GTA, in the Greater Toronto area, with a lot of properties when we're marketing them, we do something called a pre-inspection where the seller will have the inspector come by, do an inspector, so prospective buyers can look at the home inspection in advance of their purchase when they're doing their due diligence. You can have a home inspection, again, be a little bit more immersive, rather than it just being a PDF document where the home inspector details some of the potential defects of a home or anything that might need attention. The home inspector could actually dictate the inspection. We could actually film it in 3D. You could have the home inspector physically explain all these items in real time to prospective buyers. So if, let's say, they're explaining like, hey, this furnace is a little old, it may need some repairs. Or let's say when it comes to like old wiring in a house, people are like, okay, I don't even know what knob and tube looks like. Again, the home inspector through an immersive tour can give you a much better explanation of the defects of a home. Or from another perspective, a lot of times as a selling agent, we aren't there with the buyer's agent when they're explaining the features and really selling the home. We could again create an immersive tour where perhaps, maybe not so much with these snowboarding goggles, but perhaps when the technology gets a little less clunky, it'd be a cool thing where as realtors we have goggles or glasses that our clients could put on, and you have the listing agent or the sellers explain some of the cool features of the home and how they like to live in the space. So I think it's a really cool tool, and I think it has a lot of other applications for real estate. If anyone else watching this video has any other thoughts on how this technology could be used in real estate, just drop a comment below. I'd love to hear what you guys think of this technology and how it could relate to real estate. So normally we used to have market updates in the podcast. We have now moved that to its own video series here on YouTube. Head over if you're looking for the overall market update. Now, the market update does feel a little dated with the Bank of Canada update, but still, if you want to know what happened last month in Toronto real estate, head to the market update section here on the YouTube channel. You'll get that market update. And that's it for today. If you liked what you saw and you like what you heard, please subscribe, like, comment below. If you're interested in buying or selling real estate in the Greater Toronto Area or in any of the under the radar neighborhoods that you've seen, definitely hit us up, hello@garrisoncollective.com, or hit the Calendly link that we've linked down below or in our bio. We would love to be a real estate resource. And also stay tuned for more content when it comes to the neighborhood videos. We have some exciting new content coming up. We also have some house tours coming up. So definitely hit subscribe and be alerted to some of that new content when it drops. Thanks again for watching. This is Josh from Under the Radar Real Estate Garrison Collective. Peace out.